my wife, in all of her wisdom, kind of looks at me and nicely says, she goes, you know what, honey, I've been listening to you talk about this for 20 plus years. I think it's either time you poop or get off the pot.
Hi, my name is Rod Khleif, and I'm host of the Lifetime Cash Flow Through Real Estate Investing podcast. Now, each week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome back to Multifamily Rockstars. So as you guys know, these are the episodes where we dive deep into our guests' deals and we give you some practical and actionable items for getting started and doing your first deal, especially if you're brand new to multifamily. And as always, I've got my co-host, Mark Nagy, from my Massive Action team here with me.
Good to see you, Rod. Sounds like
good to be seen.
You've got a busy day. You just mentioned closing on a Texas deal, right?
Yeah, closing on a $20 million asset in San Antonio. It's about a mile away from another 296 unit asset that we own. It's a screaming deal. Oh God, it's exciting because we're paying $100,000 a door, and the one next door sold for $137 a door. So we're getting it about a 40% discount because it's the same vintage and everything. So very exciting deal. So that's closing today. We've got our Warrior event coming up this weekend in Sarasota with a few hundred of my closest friends coming to connect and network, and we're going to go deep dives on underwriting and deal analysis and just a lot going on. But it's all good, you know.
Both good problems.
You know, as you go through life, you want better quality problems. You're going to have problems, but you want a better quality problem. So these are quality problems. Exactly. So today we've got an awesome guest. His name's Matt Iverson, and Matt is actually a luxury resort broker. And I'm not sure when he joined the Warrior program. We'll find out. But he is in about 450 doors as a general partner and a limited partner. I think the general partner piece is a 97 unit we're going to dive deep on today. So we'll have fun finding out about that deal. Welcome to the show, brother. Good to see you.
Thanks, Rod. Good to be here. It's a little surreal to be here. I joined the group 2 years ago. I've listened to, I've got to be hundreds of interviews in at this point. So to be a guest is it's pretty crazy.
Oh, that's cool. Well, I appreciate that. And we're glad you're here, man. And I know you're going to add value today. So why don't you start by just giving the listeners an idea of who you are, where you came from, why real estate? Yeah.
Well, so I'll start with the real estate side just because that goes back all the way to my childhood. Real estate's really been in my blood since I was a kid. My family's been doing it, and I'd say since the mid 80s in the area of Vail, Colorado. We moved up here when I was about 12 years old, and my mom ended up getting her real estate sales license back when there was the sales versus the broker. And eventually she became a broker. In that process, they started buying and building homes in the Vail Valley area. And so most of my childhood, I remember going to projects. We'd have family dinner, and then we'd load up in the car and we'd go look at the hole in the ground, and we'd look at the footers, and then we'd watch them frame it. And so I've watched the real estate business since I was a kid. And growing up in Vail, we watched the Vail Valley grow. I went from Edwards, which was literally a 4-way stop sign, to now a major intersection, billions of dollars of development. My mom has helped broker and sell a lot of the new ground up development here. So it's really been in my blood. In late 99, I was actually in the finance business right out of college, thinking I was going to be a private wealth manager, fund manager of some sort. And about a year into that, I got a call from the CEO of Vail Resorts Development Company, and said, hey, if you're half the salesperson that your mom is, I could use your help launching some projects in Breckenridge. And my mom has been one of the top producing brokers in the nation. She's been ranked in the top 5 by Wall Street Journal. So cool. I've watched her do that. So I moved, my wife and I, who we'd been married for all of 4 months, moved to Breckenridge, and I helped Vail Resorts launch a couple condominium developments there in the base of Breckenridge, helped with a little bit of the pre-planning on a big base ski area expansion, if you will. So base of peak 7 and 8, they were expanding at multi-billion-dollar development. So once I got my license, joined the team, I realized real estate was really in my blood. That was what I wanted to do.
You know, it's funny. I love Vail. I've got so many great memories. I usually go there in the summer, though, you know, and I taking a gondola, renting bikes, taking them up to the top of Vail Pass, riding the bikes down. I remember riding down this trail and running right into 2 deer right in front of us. It was really cool. And then I took the wrong turn and we ended up going in a real sketchy part of the mountain going down. But and I'm just triggering some memories. I remember there was a kind of like a hot dog place that sold veal hot dogs. Man, they were good. You know what I'm talking about?
Dog. Oh yeah,
that was it. Swiss dog. Oh my God, they were fantastic. This is bringing back memories. And you know, you talked about your mom starting as a salesperson, then becoming a broker. I was actually a broker in Colorado when I was 18. So this is 1978. And I was able to do it all through education. Because back then you could become a broker with education. Now they got smart. You need some freaking experience, which I'm sure your mom experienced. She had to have some experience. So that's kind of cool. And, you know, you've triggered a lot of memories for me. You mentioned Vail Resorts. My best friend does a lot of their rehabs in their hotel or hotels up in that area. And they're the largest up there. But he does their refurbishments, carpet, and all that stuff. Anyway, I digress.
I probably know him.
But yeah, maybe. His name's Pete Austin. He's a really good friend. He's like my best friend, hospitality pro. But give him a shout out. He's literally my best friend. So anyway, you know, we have a lot of aspiring real estate investors on this show, people that know they want to go do something. Who do you think as our avatar, what avatar do you think would relate the most to you and who you are? Because we get all types, you know, and so how answer that in any way you like.
Yeah, well, I think that would actually probably bring me to the story of kind of how I joined the Warrior Group. Because that ties into who my avatar is, because it's exactly why I ended up joining. So I've spent 23 years in the luxury real estate sales, very transactional. My wife and I have bought and flipped multiple homes. Everything was equity based. So we just kind of put the money in, sold it a few layers, took the money out, not a lot of passive cash flow. So in 2020, in March 2020, before the lockdown, when they just started locking down, I thought we were going out of business, and it was quite the opposite. We ended up absolutely exploding like most brokers did. And I ended up writing a pretty large tax check that year. And so I was talking to my accountant. I was like, I got to figure something out on how to start reducing my tax bill while I'm doing this. And he said, you know, Matt, you're really good at selling real estate. You need to start investing in it. And so I started whining about it to my wife. And I'll never, I could tell you exactly where I was. I was driving on the highway from Moab. We were coming home from Arizona on a road trip with the girls. We had just come through Moab, about to get onto I-70 back to Colorado. And I was whining about, you know, I'm tired and, you know, big tax check. And I wish I had bought some commercial real estate. I wish I was an investor for the last 20 years. And my wife, in all of her wisdom, kind of looks at me and nicely says, she goes, you know what, honey, I've been listening to you talk about this for 20 plus years. I think it's either time you poop or get off the pot.
I love it.
So I was like, yeah, you're right. And she goes, and by the way, if you're going to decide to do it, you need to find a mentor. And I was like, okay. And it just so happened, I pulled up your podcast for the first time and started listening.
And it was all downhill from there. It was all downhill from there.
Yeah, right. So, well, I was listening to all these, started listening to Bigger Pockets. And then I pulled yours up and started listening to yours and just kept listening to interview after interview of people who got started. And I was literally driving. This is terrible, but I was driving and I texted your number that you give on your podcast.
No kidding.
On the highway. And I think a couple of days later, I was on an interview with you and Mark and started the process. So
that's it.
So,
wow.
So my avatar, the people I'm talking to, are typically higher income, transactional, you know, time for dollar people. So salespeople, doctors, accountants, you know, people who are making a lot of money, you know, putting their time into their business, but are starting to see the end of the end of the road. Their skill set's diminishing. I don't have the energy to do what I do. I mean, we do, you know, on average, previously we did about 100 million a year in sales.
Wow, that's significant. Wow.
Yeah, it's a lot of work. It's a lot of time.
Right.
In 2020, we did 267 million, and it about killed my mom and I. We actually hired my brother. We brought my brother on as a partner. We just said, we're going to pay you through the nose. Just come join us. And so now it's the three of us, but I realized, I was like, I can't I can't make this kind of money for the rest of my life, and I need to replace it with more reliable, passive, and tax efficient income. And so who I work with is a lot of people who have a good deal of wealth. They're making a good deal of money, and they just want to kind of keep putting money into their passive income portfolio.
Yeah. Yeah. So, so I know that, and you're talking about bringing in investors to like a syndication, like this one we're going to talk about. Okay.
So Matt, having experience in the real estate industry, obviously, and I know you necessarily didn't work on multifamily, but what are some of your superpowers and skill sets that maybe other high income earners or salespeople or other people relating to that can maybe think, oh, I can take that skill set and then bring that into multifamily? How did you do that?
Yeah. So, I mean, my skill set, my biggest skill set is I'm a sales person. You know, I can sell. So I enjoy working with clients. So my number one thing is I would say I'm taking that ability and I work with a lot of high income people, a lot of ultra high net worth, and they don't, you know, I'm very comfortable around them. So it's very easy for me to have conversations. So investor relations is a big deal for me. I enjoy it. I like getting on the phone with high income, high net worth people. I can just talk to them. I service them. I help them buy and sell houses constantly. And so I've had a lot of windshield time with great people, and I've learned to talk to them very comfortably as normal everyday people. So I do like investor relations. Having transacted, you know, thousands and thousands of real estate properties, doing due diligence, looking for opportunities, seeing issues is really second nature. I mean, I can walk a property. I can look at, I was looking at a deal the other day, and just the photos alone, I picked out about 6 construction issues. I was like, you know, just little tiny sidings falling off in that picture, the sidings warping this picture, you know, and it was in Ohio. I'm in Colorado. I was just looking at pictures of the deal in Ohio, and I was like, oh, there's some deferred maintenance on that just from the pictures. So yeah, so I've done a lot of due diligence on properties. My wife and I have remodeled, you know, half a dozen properties and flipped them. And so working with contractors, and you know, these are all very easy for me to do.
And of course, capital raising. I mean, you have no problem asking for money. You're used to dealing with high net worth people buying, you know, a second home in Vail, right, or Beaver Creek, or wherever up there. So, you know, that makes, you know, talking to people that have money, and see, a lot of people hang up on this. And I'm going to be talking about this at the Warrior event this weekend in raising capital. A lot of people have this block, but it's just having a friendly conversation and showing them that you're passionate about it, you believe in it, you know, you believe in the deal, you believe in the area. And just communicating that. It's just, you know, communicating. And a lot of introverted people really struggle with that. But well, there's no question that's your superpower. I mean, just listening to you talk for a few minutes, I mean, hello. So, you know, what is an action item that we could dive deep on today? Let's say that might benefit a listener, a new, you know, a budding entrepreneur, a budding investor. What's an action item? Let's pick something that we can dive deeper on.
Yeah, well, I think it goes back to the conversation with my wife. You know, either do it or don't, but make a decision one way or the other. And so I would I spent a lot of time wishing for 20 some years, wanting to buy commercial real estate and rental income, and never taking action towards it. You know, maybe it was a belief system, maybe it was a mindset, and Rod, your group does a phenomenal job of dealing with mindset. I mean, joining the Warrior group truly changed my life. I mean, it changed the trajectory of everything I'm doing. And your training and all the warriors I get to connect with are phenomenal. I mean, it's truly changed my life. So I would say your number one thing is action. And I found in my journey, actions subsides fear. If you keep taking action, fear starts reducing. But if you don't take action, fear takes hold. So that was what I did. I took action. I joined the group and just started plugging away.
Love it. You know, What's interesting is what you just said. You've got to make a decision. It starts with a decision. And it doesn't mean you dip your freaking toe in the water. It doesn't mean 1 foot in, 1 foot out. It is done. You're doing it, whatever it is. You decide. You know, Latin root for the word decision means to cut off. If you're going to, a great analogy would be if you're going to attack the island, you burn your ships because you're taking their damn ships home. That's a decision. And then you said, you know, massive freaking action. You got to take action. And you know, you talked about action and its relationship to fear, you know, or stress, which is just the achiever's word for fear. You know, anytime I'm stressed or fearful, you know, I don't care if it's midnight, I'll get my ass up and I'll do something because that mitigates it. Any action at all will mitigate it. So that's really helpful. And so the next question really is, let's talk about that 97 unit. I know you took down a deal. I assume you syndicated it. You know, let's drill down on it, brother.
Yeah. Tell us the story, because I think you've got we've talked about networking, and speaking of our networking event, you know, we always say, hey, you never know who you're going to do your first deal with. You have I think, an interesting story about how you came across this deal. Tell us about how you found it.
Yeah, that it is interesting. And networking, and I'd say action and networking are your two biggest things. And if you're going to do this, you just, you know, and the Warrior program actually accomplishes both of them for you. So
let me interject something before you answer. Let me interject something. You know what's interesting? When I get a new Warrior, I tell them, because we discovered, I don't know, about 4.5 years ago, that our most successful Warriors by far are the ones that are the most connected in the Warrior community. So we started doing all these things to connect them, like the Warrior event this weekend. We didn't start doing those. We just started those the last couple of years, and other things that we do to connect people. But people you might think I'm a little crazy when I say what I'm going to say next, but I'm going to tell you, and I tell my new Warriors this: connecting with other Warriors is actually more important than learning the business. In this business, it's really more who you know than what you know. And I know that sounds crazy, but it's absolutely the truth. So anyway, sorry to interrupt. Please continue.
No. Well, and to that point, knowing, you know, who you know. So yeah, I found this deal. This was not a Warrior deal. But I got this. It's a deal that was run by Endurus Capital. Todd Dexheimer, I think you've had him on your show.
Yeah.
And so his partner, Drew Whitson, is the finance professor at Bethel University in St. Paul. My nephew was a student of his. And so he was in one of his classes, and my nephew was talking to Drew at the end of class and said, hey, my uncle's doing, you know, this, and I've been watching his stuff. I've been talking to my nephew about it. And he goes, oh, well, what's your uncle's name? And can I reach out to him? And so Drew actually reached out to me. I had a couple of phone calls with their team. We got on a couple Zoom calls with them. And he just said, hey, we just so happen to be about a month away from closing on a deal in Columbus, Ohio. We're gonna give our first webinar literally, I think, that night. And so I logged in, watched the webinar, reviewed the deal. I liked the guys, and that's the number one thing. I think, you know, you're betting on the jockey, not necessarily the horse, but the deal made sense to me. So they were kind of, I hadn't raised for anything yet. I've never done. I just launched my company. I think November of 2022 is when I literally I was in Phoenix at my parents' house in Phoenix on Thanksgiving Day, sitting on their, you know, deck when I literally hit the email and launched my company to my database. And so, you know, I was able to connect with these guys. They were phenomenal operators, great character, our values lined up.
Did you go look at it, or what'd you do?
I did. So after the webinar, I committed to trying to raise for it. And they were kind enough. They said, hey, we know you're green. We know you've never done this, but we'll be more than happy to support you and give you a shot at it. So I called my wife and said, put us on a flight. Let's go out there and go look at the asset. Let's spend 48 hours in Columbus. And we did. We secret shopped all the properties around it. We toured the property, got really comfortable with it, took photos of me on the property, sent it to my database when I got home. And I started having some clients call and said, hey, you know, gosh, Matt, you've always done well with our real estate in Vail. We'd be happy to partner you with it on that. So obviously, one of the things that we did when I was on site, and having had a lot of real estate experience, the team had me walk through when I was on site to actually note construction deficiencies, maybe some areas that we could see some improvement, some value add opportunities. You know, I've remodeled a lot of homes. So, I mean, walking through the clubhouse alone, I was like, guys, we really need to fix some of the look and feel here, maybe separate the leasing desk from the workout area. And so we were able to do that. While I was on site, I actually got to interview a couple tenants and just kind of take some notes for the team just to see what the tenant feedback was. My wife and I pretended like we were about to lease and asked them what they liked about it, what they didn't like about it. Gave some feedback on their on-site staff as well. So, just kind of, again, took what I understood, just looking at construction and remodel, rehab experience, and tried to bring some value to that.
That's no question. You're helping with the due diligence. I mean, the tenant conversation, I can tell you, I saved $1 million on a deal from a conversation I had with a tenant in Louisiana. So, awesome. And then you also, we're helping with the due diligence on renovating that clubhouse and other deficiencies that you saw. That's fantastic. Were you going to add something, Mark?
Yeah, something you glossed over that I get asked all the time, right? People come to me and say, hey, I'm new into multifamily. Why would other people want to work with me? And you kind of glossed over the fact that you said, you've done real estate in terms of sales, but you're brand new in terms of this whole general partnership, multifamily sort of thing. Why do you think these people were willing to take a chance on you and work with you here since you hadn't done any of that stuff before?
I should probably ask them that and get their answer. I think a lot of it truly it was just the conversations we had. I think it's pretty quick when you connect with someone. You're like, okay, we hold similar values. I'd listened to Todd's podcast a bunch. I knew his character and values, and I liked it, and it aligned with mine. I think they found that we would probably be a pretty good match.
Oh, you did this one with Todd. Todd's one of the principals.
They are. They
okay.
Yeah,
the GP. So. Okay. Yeah, he's a good guy. Okay, good. Yeah. All right.
Yeah, super quality group. So, I think we just connected on the phone calls, and they were willing to do it. And this is a good advice to anyone who's getting started. Just own where you're at. If you have no experience, just be humble about it, own it. And I talked to Todd and his group and said, I've never done this. I haven't been a part of this. I could tell you what I see. I can try to bring it to my database. But I'm new, and they were like, that's all we care about, that you're honest where you're at, you own it, and let's just go from there. In
additional answer to Mark's question, you've built a relationship with these people. They see that you have integrity. They see you do what you say you're going to do. And then when you align on your values as well, it's pretty much a no-brainer. People, again, you said the same thing about, aligning with those guys that you met through the professor. It really is building a relationship. And I'm going to talk about that this weekend. It really is, don't overthink raising equity. Let them see you have integrity. And if you don't understand the numbers, bring in somebody that does, but you've got to, you are going to do finance. So you obviously know how to do the numbers, and you've had, the benefit of our training as well. So talk about the underwriting on this thing.
Yeah. So, I think the big thing that the Warrior Group teaches is conservative underwriting, and truly what that means. Everybody is a conservative underwriter. When you get in the business, you realize everybody's conservative underwriter. It takes a keen eye to look at underwriting and see who really is a conservative. So that was the big one is I looked at their underwriting model, and they were truly conservative. They were not, pie in the sky stuff, a lot of hopeful projections. He was like, here's the real picture. The big thing is they had good debt. They had good locked in debt. They de-risked the deal. And that's the one thing I look for with anyone who sends me a deal is I look at where they're de-risking it for me and my investors. And how can we, and I think now more than ever, people are seeing how important managing risk is in buying these assets.
What is the debt?
I think it's 5.5% 10-year fixed agency.
10-year.
5-year interest only. And here's what a lot of people don't realize, and I saw it in the model. If everything goes according to plan, and we all know it doesn't always, but when the interest only fell off, we were still able to pay the full pref out of cash flow. So it was a good projection. So it wasn't.
What sort of rent bumps did they project organically?
About between 250 and 300 a month.
Okay.
So
but that's over the term of the 5 years.
So that
I'm
was
talking,
their value
I'm talking
add.
yearly. Oh, that was a value add. So you went in and repositioned. Got it. Okay.
Well, the projections right out of the gate, I think we were about $200 a month below the area comps day one. So they got it. I think we were roughly $1,500 a month. Projections were right around $1,800.
The question I'm asking is, what sort of rent percentage increases did they calculate in each year for the 5 years?
So conservative. So they were about 2 to 3%.
Okay, good. Because
So
sometimes you'll see 5%. I've seen Grant I saw him put 10% on one of his. Like, come on, dude,
Not anymore.
please. I love you. No. So this is in Columbus, Ohio. I love Columbus, Ohio. We've got an asset in Columbus as well. And it's all townhomes, which it doesn't get any better than that because nobody's living above you or below you.
Yep.
Let's see, what else can you talk about the asset itself? What did you like about the asset itself?
I think being in real estate, location was always your biggest discussion. I mean, I've helped developers launch projects. I've consulted pre-construction, and I've seen a lot of developers eat their shorts because they put the right product in the wrong location. And so that's a skill set I do have. I'm a big location person. So when we flew out to look at it, it was almost instant. We knew it was right. I had 2 Starbucks.
Why? I'm going to stop. Okay, there you go. Keep going. Sorry, I interrupted. Keep going.
Nope, that's fine. Right. So I had 2 Starbucks within 3 blocks of it. I had a Culver's Burger. I had a brand new Taco Bell, KFC. There was a Sam's Club, 3 brand new hotels, and a major highway exchange within a quarter of a mile of the property. And that highway exchange, by the way, fed straight into all the employment centers.
And by the way, just real quick to add on that, for people that are listening that don't know why do they care, there's a Starbucks there that maybe don't know that. When these huge corporations decide to put these restaurants or Starbucks or whatever in these locations, they typically do their homework on population, job growth, all these sorts of things. And so those are signs that that's a good area that people are moving to. And I just wanted to mention that because you talked about that. And some people may not know, why does it matter there's a burger place nearby? Why does it matter there's a Starbucks? So I wanted to mention that.
It depends on what burger place is nearby. If it's Bob's Burgers and Sushi, that's a problem. Okay, yeah. we want to see national retailers, and I will tell you, even more than Starbucks, if you see the larger big box stores like the big grocery store chains, the Walmarts, the Whole Foods, the bigger boxes, they really do their demographic research. And I won't buy a place unless there's a Starbucks within a mile. I should own stock in that stupid company. But yeah, no, that's and the transportation is critical as well. And I teach this at my boot camps is you don't want to see a bunch of local retail. You want to see a bunch of big national retail. So you went right to that. And then, of course, like I say, the ability to go to the employment centers and the fact that they just put in 3 new hotels tells you that it's an emerging market that's growing. It's growing for sure. We want to see 3 things growing: population, income, and jobs. And I know Columbus ticks off all those boxes. So talk about the asset itself.
So, and to the point of the location, I didn't touch on it, but about a mile and a half away, there was a huge hospital that was was under construction and doubling in size.
There you go.
It was pretty quick.
One of the things, hold on, before you can move on, yeah. I want to mention this as well. One of the things that we have our warriors do is we have them do an area presentation, even if they haven't got an asset yet. So they present to the group so they can become good at what to look for, and what to look for on the websites. And one of the biggest things is what's coming in, like a hospital expanding in size. And the San Antonio asset I'm closing on today, they're putting $4 billion into the airport. I mean, that's the kind of stuff you want to have in a presentation that you show, investors. And there's a big, huge development right down the road from that asset, the one I'm closing on today. But the point is, so when you're, looking at a market, a geographic area, get plugged into the Chamber of Commerce and the local economic development office and have, alerts on your computer for Google alert for anything, articles that pop up about that, either that big MSA, metropolitan statistical area, or the smaller submarket, so that you can, really have your ear to the ground as to what's happening. All right. Now, back to the asset. Sorry.
Yeah. So the asset itself, after the location was kind of quick checked off that box, So it's a townhome style community. For everyone has a front door. Every one of them had a one car garage as well, detached one
Oh,
car
wow.
garage.
Nice. Nice.
So small little backyard area. So what the strategy was trying to hit that demographic that can't afford to buy a house, but they want a little bit more space. So that was the play. And come to find out, Columbus has a lot of this kind of product coming online as well. So we knew it was gonna meet the needs of the community. But so it was a little larger profile, which made the tenant base maybe a little stickier than normal as well. So
I'm sorry. Could you elaborate on what you just said? What do you mean larger profile?
So the units are a little bit larger. So they're
Oh, good. Okay, gotcha.
bedroom.
Okay.
Sometimes some of them had a lower level basement that could be almost like a third sleeping
nice.
area. So it's going to young families who are raising kids, things like that. So again, we've figured it's probably got a little stickier tenant base. We'll be able to keep them in on property longer, and so which makes for a healthy community.
Absolutely. You know, and one of the things you just mentioned, this is one of the slides on my economic update this weekend. I'm starting, kind of a market condition as I start the Warrior event this weekend. And one of the slides talks about this growing disparity between a person's ability to buy versus rent. And it's just that gap is becoming wider and wider. And candidly, one of the things you want to look for is that disparity because, in fact, if you're listening and you want to see an incredible presentation of a deal, go to creecapital.com and watch the webinar for this San Antonio asset that we did. So it's creecapital.com. In fact, we're still got a couple slots left in it if you're accredited, check it out. But the reason I'm telling you to watch it, even if you're not, is you'll see that we highlight some disparity that we want to see. One is rent versus buy, because if you can buy a place and what we look at there is we look at two things. We look at what we're paying per unit versus the median home price, and if they're close together, they're going to buy instead of rent, right? So that's one thing. The second thing is we look at the median income to make sure we can that people can make 3 times what our ultimate rent is going to be. Okay, so those are two things that we highlight. But anyway, you can go to creecapital.com and watch that webinar. It'll really give you an education on what we look for in a deal and in a market. So talk about the value add that you were going to do there, brother.
Yeah. So the interior units, when we walked through them, when I was walking through them, obviously there was we got to see a couple of the ones that were already value added. So there was already a little bit of a proof of concept there, and it was working for the previous owner. So we're going to go in and put slab in the kitchens, new stainless steel, paint cabinetry or replace it if it needs to. The vinyl hardwood floors, upgrade bathrooms. The complex was a little unique as it used to be individually owned townhomes. The previous owner actually started buying them back up and packaged them back together. And so in that actually, as one of the GPs, I'm now a member of the HOA board as well, because we had to form an HOA around it once we had all the assets under ownership. And so a lot of the units were in various stages of rehab. We just had an asset management meeting on it actually this morning, and we're going to actually pull back on the value add because we realized just by replacing appliances where they needed to, replacing some vinyl hardwood floors and painting, we're still getting the rent bump we needed.
Yep. You don't want to overspend. That's a common thing where you overspend. Yeah, we teach that in the Warrior program. By the way, if you're interested in applying to the Warrior program, text the word CRUSH to 72345 and then we'll have a call. Again, you text CRUSH so we can help you crush it in this business, and to 72345. Yeah.
So project us out to the future here, Matt. You've done that deal. I know we always talk about the great thing about bigger multifamily is one deal can certainly change your life. But project us out for what you feel your version of financial freedom is going to look like here moving forward, and how you plan on getting there.
Yeah. So my brand, by the way, instead of passive income, I've rebranded it to freedom income. Because for me, I like working on the assets, so I'm not looking to retire on a beach and sip Mai Tais. I'll do that from time to time, but I still like, I love real estate. I love being on site. I love managing properties. I love visioning them out. So I think the long-term kind of what they call the BHAG goal is probably right around 7,500 units. I want to kind of get to a critical mass that my kids will eventually take over. I want to pass it on to them. I want to be as direct owner of these assets as possible. I'm working on, my role right now, but eventually I just want to be as close to the ownership and management of them day to day as I can. I'd say in the next 2 years, because I think the next 24 months are a buying opportunity like we've never going to see, and I think it's only just getting started.
Yep.
I'd like to get about 2,500 units under ownership, where I'm either a higher or lead GP on them.
Yeah, love it,
Wow.
love it, love it, love it. So listen, last question. If anyone has questions about this business or about the Warrior program or just wants to reach out to you, are you okay with releasing an email or something they can reach you?
100%. I love talking to people. I really do.
Okay.
I love coaching and help. I'll tell you what I know so far, and I'd love to talk to people. I'm looking for, my goal is to partner with, maybe half a dozen to a dozen GPs and just kind of rinse and repeat with a group of people that I have a strong relationship with.
What's your email, brother? Or how do you want them to reach you?
Yeah, you can. Email is always great. It's matt@veritasequity.net. And
spell that out. VER.
Yeah.
Oh, spell that out.
Yeah. Veritas Equity is VERITAS equity.net. So
love it. Love it.
Yep.
Well, thanks for coming on, brother. It's great to see you. And, I'm sure I'll see you soon, either at this weekend's event or the next one. But, I'm a little jealous that you're in Vail, although it is pretty freaking beautiful here right now. But it's good to see you, my friend. All right.
Thanks.
Take care.
Appreciate it. It's an honor to be on.
So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.